In this video, trader is going to explore the idea that you might well be a champion trader, but you'll never know. Stay tuned. Hey guys, warm welcome to you. Alright, so you might be a champion trader, but you'll never know. What I mean by that? So I mean that very many traders, most traders, let's be honest guys, the majority of traders this applies to, start trading, they blow out their account or they quit. Most of the time they blow out their account. Very few actually stop and just quit and take the money out. I know a couple, and I've told the stories about those before, but most people will do exactly that. They'll put the money in the account, they'll trade something and they'll blow out. Now some people are going to do it after a couple of months, and those guys are probably not going to be watching and learning and going down the rabbit hole of the psychology and the setups and all this. They're going to be still in the kind of primary phase of seeing all this bits and pieces, the marketing stuff hitting them, and they're going to go, right, well, that's what I need to do, blah, blah, and lose the money and they get bored of it. Got a second level of people who kind of go a little bit deeper, start to learn more, start to understand more about what they're doing, but again, they will end up blowing up their account. And it's that account little sweet spot, I think, was the majority of people, if you look at the pie chart, where, you know, really there's potential there, not necessarily all the time, to be a champion trader, but you don't know it. Now, what I mean by this, so people look at the market as the market. If I can trade, I can trade. And that's not strictly true. You know, there are different things out there that really affect your profitability as a trader, and you'll never know them until you try them, or you're in the game long enough to recognize what your strengths and your weaknesses are. So if someone comes in, let's say someone comes in with a $5,000 account, let's say he's trading forex, right? You wouldn't be trading shares with that or stocks with that, because the pattern day trader rules 25,000, but it could be trading via CFD, of course. But let's not split hairs here. Let's say he's got a $5,000 account, comes in and he starts trading currencies, because he's seen that's the biggest thing, the most popular thing. Everyone's trading forex. So he goes and opens his account, his forex account, and he starts trading. He starts trading euro, US dollar, starts trading US dollar, JPY, all those kind of things. And then eventually he kind of grinds his account down to $2,000. He just makes those mistakes. He takes a step back, and then he kind of comes again for another few months, and eventually, you know, he's down to his last $500, and he blows up his account because he just really ground it down, and eventually he's kind of just literally gone all for nothing, tried to double up, maybe he's doubled it up and then lost it. You get the idea. So very, very common, very, very common path for a lot of people coming into trading. Now, this guy or girl has traded FX. He's traded it during, let's call it a 6-month window, right? It's nothing else. So imagine the different variables that there are out there. One of them could be time frame. Let's say this guy has swing traded as well, okay? So he's swing traded FX for 6-month window. That's all he's done. Now, he's not experimented with a different time frame, i.e. have he extended its time frame out to maybe a couple of weeks? What about if he shrunk it down and find out he's quite good at reading order flow? So there's no experimentation with that. And that's kind of an on the fence one with that. I don't think that's that great. But these are the big ones here, okay? The market. He has not traded anything else. I'm an FX trader. I trade forex. For those 6 months, he's labeled himself as an FX trader. That's all he trades. He's not have a look at any other things. Now, I'm just gonna kind of put a caveat out there and say, hey, listen, we're not talking about diving from gold to silver to crude oil to Apple to euro, US dollar, because it's a surefire way of blowing up. If you're not focused on one or two things, then you will blow up, especially as a beginner. But the point is, he has not gone and said, right, you know what about if I'm not doing so well in FX, what about if I now have a look at trading the indices, or if I look at trading some of the commodities like crude oil? You know, focus, do they trade in different, because they trade differently, guys. You know, people say that you can trade one thing, you can trade the other. I disagree hugely. There are markets out there I would not even want to go near, because they're just not conducive to my trading style. You know, it just would never work on it. And yeah, okay, if I wanted to really sit there and work a different strategy over months and years, and possibly, but there's no point. You know, certain markets that I know trade well for me in certain conditions, and I found those because I've been in the game long enough to have experienced the losses in the ones that aren't right, and the gains and the growth in the ones that are right. So this guy never has a chance to look at anything else because he's blown up his account. And then you look at the conditions. This is the big one as well. This is the 6 month. So he's been in the game for 6 months. He's seen a 6-month window of whatever that is. That could be a slow chugging bull market, which is not great for day traders. It could have been a brutal volatile market and he's getting pinged out because he hasn't seen this. It's not conducive. Or it could have been a bear market. Could have been any time of these conditions. And all he's seen is 6 measly months out of how many years and how many different conditions you can get. So he is now, he's traded FX in one particular market for 6 months in one particular style. And he's lost money and that's it. Game over. He's not involved anymore. He's not even seen that potentially this guy could be a champion trader because he may find that his edge actually lies in trading crude oil on a day trading basis during volatile times, for example. Completely different to what he's involved in. Now, like I say, people will argue trading's trading. Not true, guys. There's complete different variations with stuff. You know, swing trading, a slow moving currency that's got no news on it, and of course that isn't always the case, but let's imagine that 6 month, no news, chugging back and forth, no real trend, just kind of grinding it out, trying to swing trade and grind out some pips from that, compared to trading, you know, crude oil that's got, you know, a tax on refineries, it's got OPEC doing this, it's got global news, it's got recession fears, you know, it's swinging around. Not saying one's going to be more profitable than the other, but if you're the person that finds that one more profitable and you've constantly been trading FX 6 month chugging, grinding window, and you've lost 5 grand and you've ruled yourself out as a trader, you're out the game, you've not given yourself chance. So what's the solution? Well, my thoughts on it are, listen, if you've got that kind of account or whatever number that may be, then split it up and say, right, I'm going to approach this as if I was a business who did not know what my demographic was. Let's just say you're a restaurant, right? You're a restaurant. You don't know the area. You've got no idea what sells, what doesn't sell. You've got no knowledge. Imagine you're just kind of blindfolded going in some sort of, obviously real world this wouldn't happen, but imagine that. So you start out and you say, right, I've got my, I call it 5,000. I'm going to use $1,000 on selling burgers and see how well they sell. I'm going to have $1,000 selling vegan food and see how well that sells. I'm going to have $1,000 selling coffee, $1,000 selling high-end stuff. You get the point. The idea is then you find out which one has worked best, and then you go, right, that works well for me. Rather than chucking the whole 5 grand in, trying to sell burgers on a posh street that has a lot of fine dining establishments, doesn't really have a late night drinkers walking around it, whatever it may be. You get the idea. So you split it up and you go, right, I'm going to have $1,000 trading FX for 3 months. Okay, and that's it. I'm going to split up my position size so that I never wipe out. I'm going low, 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 and I have $1,000 trading commodities, gold, silver, metals, for example, for 3 months, crude oil or natural gas for 3 months, indices for 3 months. You get the idea. You can spread that out then over 5 chunks of time, whatever chunks of time they are, over a year, half a year, 2 years, whatever. And then at least you've got a chance to see what you're good at. And if you have got in you a champion day trader, but you just, or champion trader, not so day trader, of course, of the time frame, but you just never see it because you're down one tunnel vision. You're trying to do it, and you never give yourself opportunity. You know, I think of it, and a good analogy might be, you know, if there's a family business, right? You hear about these people with a family business, a son or daughter suddenly old enough to become the family business. Very often, the astute owner or the father, the mother, the family who own the business say to the son or daughter, hey, I want you to work in this department for 6 months, this department for 6 months, this department for 6 months, this, you get the idea. So they go from logistics to purchasing to sales to marketing to whatever the business may be. And at the end of it, they go, you know what? I actually did really, really well in sales. I enjoyed it, and that was my best thing. Logistics was my worst. Great. There you go. You can start working your way up in the sales and become, you know, a sales manager, a sales director, etc., etc., etc. So that's how they do it. That's how it works well for a lot of people. So why not do it in trading, guys? Why not, instead of fixating on one thing, trying to do the same thing with no structure, split it up. Say, you know, I'm going to try this and try this. Don't flip-flop, but structure it. Say, okay, just like a course would be if you went and did a higher education course. It's 3 months on this, it's 3 months on this, it's 3 months on this, it's 3 months on this. And you'll have so much more knowledge and so much more information about the type of trader you want to be, and whether you have got something in there, a spark that can be fueled and can be kind of brought up, and, you know, maybe you've got the champion trader in you. All right, guys, let me know what you thought about this one. Take care, see you next one, bye-bye.